Also with us on this Monday, Gayle, senior investment strategist over at Ridgeworth Capital Management in Richmond, Virginia. He helps his company manage about $63 billion in assets. So, Alan, let's kick it off with you. Hank Smith from Haverford Trust saying that stocks are undervalued. Do you agree, considering the move up that we've seen?
Well, I would say that stocks are reasonably valued. I think the positive that you can say for the market is that the economy is plodding along in the right direction, and that we have low inflation and accommodative monetary and fiscal policy. So I think that those are all positive underpinnings for the market. Valuations, in our view, are more reasonable, and so the critical element for the market going forward is being able to maintain momentum and start growing that top line again.
Do you think that's likely?
Well, I would say that I was not overly encouraged by the personal income reports that came out this morning. I think they suggest that the consumer remains very dependent on stimulus spending. And that there is going to be a lot of pressure on this Friday jobs report to see whether or not the economy is starting to kick in gear and generate real sustainable job growth.
You know, we've been talking about, I know it's Monday, the report's on Friday, but this always happens in a jobs report. We start talking about it on Monday because it is such a big report. We're looking at non-farm payroll creation, job creation of about close to 200,000. I mean, anything below that, a disappointment in your view, Alan, especially when you take into account those census workers?
Well, I think so. If you know, the market is factoring in weather, it's factoring in census. So there's a lot of upside bias to the estimate out there, and you're right, the estimates have been creeping higher. So in and of itself, it means that there's going to have to be a lot of analysis done on this report. It's probably good that we're doing it when the equity markets are closed. But I would say that if we fall short of that, the markets may have to rethink momentum going into the second quarter.
Hey, and Alan, when we talk about some of those commodity names, anything interesting you're noticing in the trade, and do you like that group?
Well, I would say that we do. We like metals in particular, and some of the gains we've seen today are very encouraging, because that is a group that we like. We think that it's a good global expansion play. We think that it's a good dollar play. So I think that being involved in that group is one area in particular that we like.
What about you, Alan? You buying an iPad?
Well, not yet. I'm still loving my iPhone, and I'm trying to figure out where the incremental value is.
Alan, you agree that we're going to see some type of correction at some point, and if so, how big a correction?
Well, I would say that a rethinking or a reset is certainly an appropriate time after about a 75% run in the S&P 500. I think that any correction we see is probably going to be around in the 10% range, and then I agree we do finish the year higher.
Would you like to see a correction at this point, Alan, considering the move up that we've seen?
Well, I would, because I think that you know, some of the interesting remarks that we've heard, I agree with completely. I think the rally going forward is going to be much more company specific, and our Ridgeworth portfolio managers, in some cases, have taken off some of the gains that we had in the technology space, building up our industrials exposure. But it's being done on a company by company basis, and the ability to execute good business plans is going to be critical. And so we think it's going to be more selective. And that means we'll probably have a choppy transition.
Alan, let me ask you, because it seemed like at the end of last year, you know, we started to talk about the worries that we'll see in 2010, be it the deficit, the unwinding of the stimulus. Feels like people are starting to push that out, and that's now a 2011 story. Is that kind of your view, or do you see it differently?
Well, I would say that we do have some longer-term headwinds that we're facing. So that's going to be a multi-year event, whether we're talking about deleveraging or fighting the deficit. What I think near-term is going to be critical is that, in my mind, we've had our survival rally. But I think that going forward, companies are going to have to demonstrate that they can grow earnings on a sustainable basis. And I think that some companies are going to come through, as we've already seen. I think others are going to falter. And so when that happens, I think we get some chop. The VIX starts moving higher, and we start having a more troublesome market for the near term.
In terms of estimates, Alan, that are out there, be it for earnings and so on and so forth, are they high at your view? In your view, are they kind of very upbeat at this point?
Well, the overall earnings estimate for the S&P 500 have been rising over the past quarter, and now they've kind of tapered off a little bit. Our estimates for 2010 are in the $78 to $80 range. I've seen some estimates out there that are notably higher, but I would say that $78 to $80 range is probably pretty good. The challenge, as I've said before, though, is that some of the companies are going to deliver on expectations and others aren't.
Alan, your thoughts in terms of the next week? Once we get through the jobs report, then what's your next focal point? Is it those earnings?
Oh, yes. It's a question of whether or not we can generate some good top-line earnings growth.
All right. We're going to leave it there. Hey, guys, thank you so much. We appreciate it. Alan Gayle joining us of Ridgeworth Financial, and Andrew